Hey folks, it's Chris Rowe, and today I'm going to show you a technical indicator that is the #1 best stock market indicator that you can use to make money to time the stock market. Now, this is coming from a 26-year veteran. I've been a Wall Streeter for 26 years. I'm a professional investor. I'm an institutional money manager. I own an investment research firm. I'm telling you, this is the #1 best stock market timing indicator there is. I'm going to talk to you about how you can use it for the rest of your life, and hopefully it'll impact you half as much as it's impacted me, at least. So it's called the New York Stock Exchange BPI, which is the New York Stock Exchange Bullish Percent Index. And the reason this tool is so important is because it helps prevent making emotional decisions, which is the #1 reason why people lose money in the stock market, because they make emotional decisions. And you can't blame people when they see the stock market going straight down in free fall. You can't blame them for selling at the time. But in hindsight, they always look back and they always say, I should have known better than to sell at that absolute low. This tool prevents you from doing that. In fact, this tool will probably have you sitting in cash while the stock market is crashing and getting back in at the absolute bottom. So this reading is expressed as a percentage. So it oscillates between 0 and 100 back and forth. This is a stock market indicator that was invented in 1954 by a guy named Abe Cohen, A.W. Cohen, who's the founder of Investors Intelligence. Investors Intelligence is a group that makes money from advising some of the smartest hedge funds in the world on how they can make money. What I love most about this tool is it's very, very simple. It tells you whether supply is in control or demand is in control. So basically, whether sellers are in control and prices are more likely to move lower, or demand is in control, buyers are in control and they're moving the market higher. The people that have hundreds of billions of dollars to invest that are moving the stock market up or down, when they want to buy stocks, they put in what's called buy programs, and everybody's on the same page that it's time for stock prices to move up. I've been pretty successful at investing since the day I went to Wall Street, because the day I went to Wall Street, it was the first thing that they taught me. My mentor taught me about the New York Stock Exchange Bullish Percent Index. By the way, this indicator helped me build my reputation of calling every single major market top and bottom since I got into investing in 1995. When the stock market is bottoming out after going much, much lower, you have to really think about the environment that you're in. Everybody thinks stock prices are going to continue to move lower. The only reason the stock market goes down by so much is because there has been so much selling that it actually moved the entire stock market much lower. What that means is people that have been investing professionally for 30 or 40 years that are fund managers, even they think stock prices are moving lower. The stock market would not have gone that low if it weren't for them selling and selling and selling some more. You have to think about, why are they selling? Because they think prices are going to go even lower. So it's very emotionally charged, and it's very, very difficult when the stock market is at a low to call the absolute low. But yet with this tool, I have called every single stock market low since I got in 1995. It only changes direction a few times per year. So when it changes direction, that's when you should listen. And it's very, very simple. It's like red light stop, green light go. It is really that simple. So instead of red light stop, green light go, it's either in a column of O's, which is like red light stop, or it's in a column of X's, which means green light go. So after the stock market has gone into free fall, and then you see this thing flip into a column of X's and it says green light go, the rest of the world they're gonna think you're absolutely crazy for stepping in and buying at that level. And the market's gonna be so oversold when you buy at that level that it's gonna be probably among the best times to jump in historically and buy stocks. So we all know that Wall Street and the stock market is absolutely rigged. It's a place where we can transfer wealth from average, ordinary people into the pockets of the big institutional investors. That's it. It's just a machine where they move money from your bank account into their bank account. And they do so by using tools like this New York Stock Exchange BPI. New York Stock Exchange BPI is going to allow you to see what they're seeing, and it's going to allow you to be aligned with them. And you're going to be lining your pockets with other people's losses. And it's, unfortunately, in the stock market, it's a place where somebody loses and somebody wins. But this has kept me on the right side of the trade my entire career. Now, New York Stock Exchange BPI, in 2002 and 2003, when the stock market bottomed out after the dot-com bust, I was in there accumulating stocks, buying as much stock as I possibly can. Everybody told me that I was crazy for buying stocks at those levels. And the stock market bottomed out and took off from there. Prior to that, 9/11, obviously the world was running around with its hair on fire. It was a very scary time for everybody. The stock market actually closed down for several days and opened at a much lower price. Now, when that happened, the BPI eventually flipped back to X's, said green light go, it's time to start buying. I did it, and I bought at the absolute bottom after the 9/11 attacks. So then again, fast forward to the 2002-2003 bear market low, I went in and bought stock at that point. And it also tells you when to sell. So after the 9/11 low, we bought stock, and then the stock market traded up about 21% off of that low. And individual stocks, some of them doubled or tripled from that low. And the New York Stock Exchange BPI tells you when it's time to get out of those positions. So it gets you out of those positions at intermediate term highs, gets you back in at intermediate term lows. Then you fast forward to 2006. There was a big market sell-off in 2006. We'll pop it up on your screen. And you can see I got out of a lot of positions at the high before the collapse. Market collapsed. Afterwards, we got the green light go, basically a column of X's from this New York Stock Exchange BPI. Stock market ran up in 2007. In 2007, there was two major highs in July and in October. And the New York Stock Exchange BPI told me to get out at the top in 2007 in July, to buy again after the market dipped in August, and then again in October and November of 2007 to get out of the stock market and actually profit from downside moves. So you can also use this to profit from stocks trading lower. You can buy put options, you can sell short stock. You'll eventually learn how to do that if you don't know how to do that. But for beginners, for the green novice, this just means moving into cash and staying out of stocks. Or it might mean just lightening up on your bullish stock portfolio and increasing your cash position. There's a lot of different ways to play it, but today it's just about market timing, so we'll keep the conversation there. So in 2008, the stock market drifted lower. Right before the market crashed, I sent out an email to over 200,000 people telling them it's time to completely get out of stocks. Told New York Stock Exchange BPI is saying it's time to sell. And I even told people if they wanted to be aggressive that they should take what's called bearish positions. And that just means profit from things moving lower. So when the stock market crashed in 2008, my followers and I made a lot of money. It's 2021 right now, towards the end of the year when I'm recording this. To this day, I still have people coming to me every couple weeks thanking me for that 2008 warning and how they made a lot of money in 2008. Now, you have to think about this. If you're profiting from stocks going lower, you're actually making money. And then when it bottoms out and you sell out of those and you exit those bearish positions, you now have a whole bunch of cash where you can buy stocks at basement bargain prices. And that's what we did. Then through 2008, 2009, 2010, right before there's what was called the flash crash of 2010, leading up to the flash crash, which happened in May of 2010, in April, I said for everybody to get out of bullish positions, to start taking bearish positions. Stock market looks weak. And this tool, the New York Stock Exchange BPI, said to sell. Basically a column of O's, which means the red light stop. And again, bought at the bottom. 2011, in May of 2011 was the market top in 2011. Same thing. Bearish positions at the top, told people to start lightening up on their bullish positions. Stock market bottomed out later that year. And this just goes on and on and on. 2017, 2018, there were some major highs where we got out of stocks and bought when the coast was clear and demand took control again. That brings me to 2020, the COVID crash. I told people to take bearish positions for 2 months leading up to the COVID crash. New York Stock Exchange BPI guided me out of stocks when the stock market was about to crash and back into stocks literally the day of the stock market bottom in March of 2020. I sent out an email to all my followers saying demand is taking control. And it was all because of the Bullish Percent Index, the BPI. So you can follow the New York Stock Exchange BPI if you go to truemarketinsiders.com/BPI. And whenever there's a major change in the BPI, whenever it flips from X's to O's or O's to X's, basically telling you supply or demand is in control, you should act now. Whenever those major changes happen, we put a commentary right below explaining the context, explaining what we're doing, explaining what it means, everything that you need to know. Even if you are somebody who just opened their stock account yesterday, you'll have a good understanding of what the BPI is telling you at the time. That's all out of me. This is Chris Rowe with True Market Insiders. You can follow me by clicking on the link below. For more tips and tricks like this, like, subscribe, click the link in my bio, and I will see you on the next one. This is Chris Rowe with True Market Insiders.